Hey everybody, it's almost 12:30 UTC. Just going through Bitcoin since it's Monday and there's a lot to go through. So first off, just looking at the big data points coming out, we've got some JOLTS job openings. That's going to be relatively important coming out tomorrow. Uh, Fed Chair Powell is speaking Wednesday evening, so definitely like late market on Wednesday expect some movement. The big stuff coming up really is Friday. Non-farm payrolls, unemployment rate, consumer sentiment. The biggest things with that is it'll set the tone definitely going into the inflation data that we have coming out the week after. So there's a couple interesting points coming out before we start getting into, mid-December, and then things start to slow down during the Christmas season. Looking over to commitment traders, we're actually delayed right now, so we don't have the most recent report that should have come out on Friday. Of course, this is probably due to the Thanksgiving holiday weekend. Looking at the long short ratios, the number one thing that's standing out to me is that we're seeing a big increase in taker and long short ratios. So people coming back over that 50-50 mark on the long shorts, people retail aggressively longing probably means we're going to go lower, right? That's generally how that works. So this coming up basically means we've got some retracement to the downside expected. The funding rates also open interest is quite high, about twice still what the normal market should be, which is 0.01. That's just the standard. In general, across the board, Binance, OKX very heavily, so BitMEX is neutral, which is nice. But in general, you got some downside pressure still. Again, trying to build back those short order books after we've made such really strong moves to the upside. And then finally, looking at the liquidity side, yeah, we've got a really big, beautiful pocket of liquidity just below us. This also would coincide with losing lows going back into the 28th of November. So losing these lows, the fact that we're grinding back down this high that we made on the 29th, followed by the subsequent retest failure back down at 98K. Yeah, it's nice, it's grindy, and it looks like we want to come all the way back down to retest the low structure around 92K just based off of those liquidations. So, with that being said, looking over at the charts for the general kind of plan here, I think that coincides based off of the liquidity. Looking at effectively what we've done in the last 2 weeks, right? We're seeing that move to the upside. This was kind of like the big deal. We had the move up, failure to make 100K, obviously. We had the local swing fail, we had another swing fail, and it's doing this nice little as expected kind of lower high general move to the downside, which is nice. I think here, if we do have a step off move back up towards December, I think we should still come back down to the lows. The thing that starts to break kind of like this downward pressure that we have, especially given that there's so much liquidity just underneath 95K, is if we start seeing a regain of the weekly open. We're below the monthly open, the December open. We're below the weekly. I think there's a free short if we do come back up towards the weekly, and potentially even just to do underside retesting here locally. The best one will definitely be if we lose 95K and then start to break down to retest the low structure. And I think if we do create a new low underneath, 92K, effectively these wicks down to 91K, then we're talking out a bigger retest back to, mid-range structure, potentially even sweeping the lows, right, and farming out something a little bit more higher time frame grindy, right? So we would actually effectively come all the way back down to the lows, right? Break him, do some type of regain, and then we farm out this larger kind of flag effectively if that happens. So still some downside pressure. Really happy if we do have a reversal and start regaining the weekly open. I think at any point in 98.9K, that gain is what takes us well past 100K. I think to at least 101 on the initial push. But is there enough short liquidity there? I think there's some. I think we can do a lot more as far as building the structure out. And the easy play here is really simple. If you start losing the lows, which is potentially likely going into the New York Open at 95K, I want to see some deeper retests down to like 93.4, 92K, and then we'll see what happens. But the moment we make a new low here, what have we done? Right? From a high, still made a higher low. This is a lower high. And if we make a new low here underneath this structure, that's a lower low. What do we need for a trend change? A sequential, if we're making higher highs and higher lows, the sequential change is a lower high and a lower low, or a lower low and a lower high sequentially. So the moment we do that, things start to change, at least in the higher time frame. The general move is still to the upside on the high time frame. For us to really have any type of capitulation on the bull market, you'd have to see probably a loss of like 75k or 70k, which I don't see anytime soon. Likely to be 70 to 60k will be the bear market low next cycle. But for the time being and for now, it still looks good. Play the levels. If you're getting chopped out in these zones, wait for the bigger failures. And technically, the high time frame's still up until we start creating those new lows. So trade it as such. Peace out.